Why non-QM might be the future of mortgages. I honestly think one of the biggest shifts happening in the mortgage industry right now is that the traditional borrower barely exists anymore. Hey guys, this is Sal Bossio with Mortgage Universe on YouTube. Because for decades, the mortgage system was basically built around one type of person: stable W-2 income, predictable paychecks, simple tax returns. But look at the economy today. More entrepreneurs, more freelancers, more commission income, more investors, more self-employed people, more people with multiple income streams. The workforce completely changed. But traditional underwriting, in many ways, still operates like everybody has one clean salaried job and perfectly straightforward income. And this is exactly why non-QM lending exploded, because lenders started realizing modern borrowers don't always fit neatly into a traditional box. And here's the part most people misunderstand. When they hear non-QM, they immediately think, oh, risky loans. But that's not what it is. Most non-QM lending is simply just alternative ways of verifying financial strength. Non-QM stands for non-qualified mortgage. That's the shift. And honestly, some of the strongest borrowers I talk to every week end up using non-QM products. Business owners, real estate investors, 1099 earners, retirees, high net worth borrowers. Even just this week, I closed a bank statement loan, I closed a 1099 loan, and I closed an asset depletion loan. Those are three non-QM products. Those borrowers would not have been able to qualify without this product type. So, people with strong assets, strong liquidity, strong cash flow, but income structures that don't fit conventional underwriting cleanly. Take DSCR loans for an example. Traditional lending focuses heavily on personal income. DSCR lending shifted the focus towards the property itself. Did the property cash flow? Does the asset support the debt? That framework completely changed how many investors scale real estate. Same thing with 1099 loans. Instead of hyperanalyzing massive tax returns and write-offs, many lenders focus more heavily on 1099 income itself. Deposit consistency, business stability, again, different framework. And by the way, if you guys are into conversations like this, DSCR loans, self-employed, investing, leverage, how lending actually works behind the scenes, go ahead and click that like and subscribe button, and definitely follow along, because I'm going to be doing way more of these videos. Because I genuinely think most people still underestimate how much this side of lending is actually growing. Now, obviously, underwriting still matters. This isn't random, easy money lending. Credit matters, reserves matter, like I always say in every video. But the industry is slowly becoming more focused on overall financial strength. So instead of forcing every borrower into one rigid formula, that's the bigger shift happening. Because the reality is, income itself became more flexible. Somebody today might have a business, rental income, consulting income, online income, investments. Modern wealth building became layered. I think this trend is only going to accelerate over the next decade because younger generations are building income differently. People switch careers more, start businesses more, invest more, work remotely more, create income online more. The economy evolved, so naturally lending had to evolve as well. And I think eventually non-QM stops being viewed as some niche corner of the industry and simply becomes a normal part of modern mortgage lending because the modern borrower changed. And the lenders who understand that shift early are probably going to dominate the next generation of mortgages.